Well, I think anytime that you have, the rate of forward momentum slows, and again, these are deep cyclicals. So when, by definition, when things aren't getting better, they're getting a little bit worse. And I think that's what we're really contending with here. In this sector, we always struggle with periods of time where, the stocks come off their highs pretty rapidly, but oil is still holding in there. And there's pretty attractive fundamentals here. I do think investors are going to want to see a little bit more clarity before that happens. But fundamentals clearly in the low 60s are really, really solid for a lot of these companies right now.
Now, wait, am I misreading your note here, which is called "No Good Reason to Own Energy Stocks"?
Well, we do try to come up with some punchy subtitles on a Sunday evening to to catch your attention. But I think I think that was just a sentiment of saying, we did a lot of investor conversations last week as these stocks really started sliding last week. And I guess, it's a sentiment that you brought up, which is, a lot of these stocks are up a lot year to date. A lot of our, clients are sitting on pretty good year to date returns. And as that forward momentum slows, you're really going to need a hook to kind of get back involved. So I think that drives, and that's what we've seen with the pullback of volumes and a lot of kind of these summer doldrums that we normally see in the sector. So that's really what we're trying to convey was a little bit of that feedback we're getting from our customers.
So within this sector, are there names that are less bad, in other words, or ones that you would single out because the sector is very broad? I heard an experienced investor last week talking very glowingly, for example, about ConocoPhillips, among others.
Yeah, ConocoPhillips is a name that we like. I mean, I think, Tyler, at the end of the day, oil is still going to determine the direction of this sector. But I do think we've got a couple of really defendable business models. Conoco's a really good example where, you've really reset the expectations. The company recently had an analyst day outline 10-year free cash flow generations. And just to say, names like that, we see even in the low 60s, generating, teens free cash yields. And so, I think that there's plenty for investors here as they sift through. But, names like ConocoPhillips, names like Devon Energy, trading, above an 8% dividend yield for that free cash on next year's numbers. I mean, I think there's a couple of pieces here, but I do think investors are going to want to hear the 2Q calls and hear really how companies are thinking about the leading edge of demand and whether or not this is really changing the outlook. If I may, one of the silver linings of this period of volatility is that any U.S. producer that was thinking about really getting back after some growth next year is going to be thinking twice after this experience. And I think that that's really the silver lining of these OPEC meetings is that you get a little bit of volatility in the market, which will keep the U.S. producers on the sidelines, which I think is really important from a fundamental perspective for food balancing, if you will.
Shepard Smith here. Thanks for watching CNBC on YouTube.